third quarter of 2010, the office saw a negative absorption of 192,000 square feet. While overall absorption was negative, we did see some positive activity in the market and several large deals were completed. Elmer's signed for 30,000 square feet in Westerville, Blue Mile for 30,000 square feet in New Albany, and Nations Health for 45,000 square feet in Gahanna. Blue Mile and Elmer's both went to tax-abated buildings and took advantage of the lower operating expenses. For the third quarter, again, overall, we saw a good amount of activity. Unfortunately, though, for every step forward we took, there was one or two steps taken backwards of tenants right-sizing their space, blending and extending their lease, and putting additional space back on the market, or tenants actually giving up the shadow space that they've had in their space for the last several years.
For the fourth quarter and into 2011, we expect positive absorption in the market. It's not going to be significant absorption, but it's going to be positive. We are right now tracking 5 to 6 tenants that range in size from 15 to 120,000 square feet that are real deals in the market we expect to hit in the next 6 months. One thing we want our clients to monitor, whether it be tenants or landlords, is short-term lease rollover. They're clients of ours that have negotiated short-term leases in the past, and a lot of those are going to be coming due in 2011. And those are going to be opportunities on both tenants and landlords to make deals and be aggressive still, but we expect those terms to be changing a little bit and maybe have longer term leases than such a short term perspective, given the positive economic news. Landlords are going to need to remain aggressive though still to retain tenants and go after tenants that they see there in the market. The free rent incentives, the discounted rent is still going to be something that's expected in the market just because there's going to continue to be competition for tenants.
To view the third quarter market trends in its entirety, please click on the link below.